Hey, welcome back to Fiscal Voyage. I'm Felix, and we're gonna cover Target. I actually made a video on Target in March of 2018. We're gonna go back to that video, and we're gonna talk about Target stock press release for the third quarter, which was outstanding. The stock is up 4% today, right now, as I make this video. So we're gonna look at the previous video that I made. We're gonna look at some of the fundamentals, and we're gonna look at the earnings release for Target and determine if it's still a good buying opportunity now in today's price. But before we get started, if you're new to the channel, make sure to hit that subscribe button, and if you'd like to make money, hit that like button as well. So let's get started with the stock analysis on Target. All right, so here's when I made the video for Target, ticker symbol TGT, stock analysis on March 2018. You can see here, March 2nd is when I made the video. It was uploaded, Target Corporation stock analysis, and you can see here at this time, on March 2nd, the price was $75, and I had a fair price with all my estimates and things like that of about $70.19 a share. So the company was overvalued by 7%. Target, is a high quality company, so even though it was overvalued, it might be in the marginal area of fairly valued at that time. However, I gave Target a hold in that day and during this video. Because I thought it was more than what I was willing to pay, so therefore I gave it a hold recommendation. So this was March 2nd, 2018. So if we go back to that day, 2018, March 2nd, right here, you can see here it dropped after that video slightly, about 10%. That would have probably made it slightly undervalued, about a percentage or two. But then it picked up very nicely, and it's got as high as what, 15%. 17% here in September 14. So even though I had it as a hold, it went up a few months later, 17%. However, in the end of 2008, November and December, the stock dropped almost 20% since that video, and that absolutely was a great buying opportunity to purchase. Even when it dropped, over here in this time period. 9%, 10% was a great buying opportunity, because it would have gave you about 5% undervaluation for this company, for Target. And then it's got as low as what we got here at $64, $61. And those were great buying opportunities. And then you can see since then, the stock has jumped up tremendously, almost 162%. So let's look at the earnings report for Target, because the stock is up today about 4%. So we're going to look at the press release and see how exactly Target performed. So you can see right now Target at $170.06. It's up 4.31% because of the great earnings report. And you can see here Target beats estimate earnings by $1.18 and beats on revenue. Comp sales up 20.7%. So that's great numbers there. You can see here they had a non-GAAP earnings of $2.79, beating estimates by $1.18. Revenue came in at $22.6 billion for the quarter, which is 21% higher year over year, and it beats the estimate of $1.89 billion. So they were estimating about 21 billion or 20 billion for the quarter, but as you can see here, it beat the estimates. So let's look at the earnings report for Target for the third quarter. So some of the key things here: third quarter comparable sales grew at 20.7%. Excellent. You can see here comparable traffic grew 4.5% and average ticket grew 15.6%. This is basically saying customers spent 15.6% more than the previous quarter or the previous year over year. Store comparable sales grew 9.9%. Digital comparable sales grew a whopping 155%, so that's outstanding. And then more than 95% of Target's third quarter sales were fulfilled by its stores. So basically mean a lot of, if people were buying online with the digital comparable sales, they were able to either pick it up at the store or, have it the drive up, pick up and things like that. So that's excellent that people were able to buy it online and pick it up at store the same day. So that's very good there. So let's continue with the report. First off, they do not provide a fiscal 2020 guidance because of COVID and a lot of uncertainties in the economy right now. Then we continue going down. You can see here total revenue up 21.3% for the quarter, and for the 9 months up 19.2%. So that's excellent growth in revenue. Very happy about that as a current shareholder. But even though they increased the revenue, cost of sale also grew. You can see here it grew by 19% year over year and 20% for the first 9 months for fiscal 2020. Some other key things: operating income grew at 93.1% for the quarter and 35.9% for the first 9 months. So excellent operating income growth there. Net earnings, you can see here, grew as well. Very excellent, 41% for the quarter and 22% for the 9 months fiscal year 2020 compared to fiscal year 2019. Net earnings per share grew 44.5% for the quarter and 25% for the 9 months. So excellent income statement here and excellent growth overall. So we look at the balance sheet for Target. You can see here they also increased their cash and cash equivalents from 2.5 billion to now about 6 billion. So it's almost a 3 billion increase. Total assets increased dramatically. You can see here from 12.9 billion to now 20 billion. And most of this increase was because of the cash and cash equivalents increase, as well as the inventory increase. You can see here from about 9 to now 13 billion. So overall, total assets increased very substantially, about 8 billion. If we look at account payables, they owe a lot more than they did in February 2020. Not too concerning there. Current liabilities did increase from 14 billion to 20 billion. But overall, you can see here total non-concurrent liabilities only at 17 billion compared to the 50 billion in total assets. So that's a great ratio there. Now we look at the cash flow statements. You can see here they made a profit of almost $3 billion. Overall, cash provided by operation came in at 7 billion. Minus the expenditure for property and equipment or capex of 2 billion, you have a free cash flow of about 5 billion, which covers the dividend paid of 1 billion. So you have about a payout free cash flow ratio of maybe about 20% or so, from 5 billion to a free cash flow minus the 1 billion. So you have about $4 billion in free cash flow. And the good thing is, what I like here, they only purchased about 741 million in share buyback, which is a decrease from the previous year in November. This is positive because I think the stock is overvalued, so they shouldn't be buying shares of this company. Hopefully this was during the second quarter. And overall, cash and cash equivalents grew substantially. You can see here from 969 million to about $6 billion in cash and cash equivalents. So overall, great balance sheet, great cash flow sheet, and great income sheet. So let's look at the fast graph for Target. So first off, you hear the fast graph for Target Corporation. You can see here overall the company has done very well. It had a few down years. You can see in 2018 it had a negative 14% earnings growth from 333 to 286. In 2014, it also decreased earnings about 27% from 437 to 321. So, but overall, you know, the earnings are in an upward trend, which is very likely, and they've been growing at an 8.65% compounded annually. The green dots represents my buying position for this company. So now allow us to add the price for the stock, and you can see here this was the position when I bought shares. So I bought it here, it jumped, I didn't buy anything, and then all of a sudden it dropped in 2017, and I bought more shares, and then 2018 it started to pick up, and then the drop here. I made the video thing around this time period, and then it jumped pretty nicely, but then it dropped, and this was a great buying opportunity here. I didn't buy anything because I was happy with my current position. I own about $5,000 to $6,000 worth of Target, so it's been growing very nicely since then. But you can see here, we're showing this time period for the past 5 years. You can see that the stock is overvalued based on the normal multiple around 15. Right now it has a multiple of 22.79, and this is from yesterday's closing price. So this doesn't include the 4% increase that happened today. So now, this doesn't mean that the stock can't continue going up to maybe $200 a share. It's very much possible. But the thing a lot of people don't consider is the risk. So I like to buy stocks with a margin of safety, with good margin of risk. That buying shares at this low doesn't, for me, to me, I think of it as it can't go any lower. But with this, I could see the stock dropping all the way back here to a 15 multiple, maybe to a 13 multiple, because maybe they had a bad few quarters. So I could definitely see that happening. So I'm personally not buying more shares. I'm going to continue holding Target and collecting the dividends. But overall, solid company. I like it. That's why I own it. But I'm not buying. I'm not a buyer at this price point. And even the fact that it's up about 4%. You can see here earnings yield 4.4%. I like to see a 6.5%, 7% higher. The dividend yield is low at 1.6 when I currently have a yield on cost about 5%. But overall, Target is a solid company. S&P credit rating of A, investment grade, and the long-term debt to cap is reasonable at 56%. So overall, solid company. I just don't like the price at today's price, and considering the fact that it's up, 4.5%. So those were my thoughts on Target. Outstanding quarter for 3Q. Overall, I think the stock is overvalued. I personally wouldn't be buying right now. I do own a pretty significant amount of shares for my portfolio. I am very happy with it right now, and I'm going to continue holding shares of Target and collecting that dividend. And however, I'm going to be reinvesting that dividend elsewhere and into undervalued companies. But right now, very happy with the performance on Target. I'm up over 130 or 50% with my portfolio for Target, so I'm very happy shareholder here. So thank you to the Target employees and to the management as well. So overall, happy shareholder here. So thank you for watching. If you liked the video, make sure to hit that like button. And if you're new to the channel, make sure to hit that subscribe button for more videos like this. And I'll see you guys in the next one.